Oh, hello there. I didn't see you. I was just reviewing my crop insurance policies. You know, farming, it's a risky business. A darn risky business. Maybe one of the hardest businesses out there. And what? Organic farmers, they have it even harder. One financial lighthouse, though, in this sea of agri-uncertainty is crop insurance. Farmers participate in crop insurance programs so that when the weather gets lousy and the floods or the droughts wipe the crop right out of the field, farmers can still cover their costs. Crop insurance, well, it keeps the farmers on the land, and the land in the family for generations. Now, you seem like a young, smart, whippersnapper, and I've got a good hunch that you're going to want to know the ins and the outs of a program that is so crucial to farmers' living. Don't you want to know more so that you can offer your clients a wider knowledge of the industry? I thought so. This course is for crop advisors, agronomists, extension agents, and others who work closely with farmers to understand more completely how organic crop insurance works, so that you can offer and advise your farmers that you serve. Whether you're in fertilizer, or seed, or consulting, or another fine line of business, the rules of organic crop insurance have a deep impact on what makes good financial sense to an organic farmer. Now, if you apply yourself to this course, you'll learn how the organic crop insurance program works, along with the benefits and limitations that organic farmers work under. Now, this course is going to deal with details and a little bit of math. There's just no way around it, and I refuse to coddle you, because I can tell you that the details and the math are just crucial to crop insurance. And to understand how crop insurance works, we've got to buckle down and focus. But I can also tell you that we are going to have a little bit of fun. Crop insurance can be a little bit dry. That's it. I said it. The course could be very boring. But gosh darn it, we're not going to let it be. I'm committed. So you're going to get this educational video, and we're going to go somewhere where no video has gone before. We're going to make crop insurance fun.
Now, all jokes aside, I'm Nate Powell-Palm. I'm an organic agronomist, consultant, organic inspector, and currently, in 2023, serve as the chair of the National Organic Standards Board. But most importantly, for this course, I'm a certified organic farmer in Montana, and I use crop insurance to protect my business. All right, let's rock and roll. In this first lesson, you're going to learn what crop insurance is, how it works, and the players involved, as well as the cycle that farmers go through from application to claim. We're starting from the very beginning so that you have a strong foundation. And while some of this might seem pretty obvious, pay attention, because these simple pieces are part of a complex system that can either make it or break it for your farmers. So you ready? Let's fire up those tractors and go. Now, crop insurance is a tool purchased by farmers to protect themselves from yield loss due to natural causes or market changes. Realize that crop insurance does not cover mistakes or poor planning. For example, hey, Dale.
Hey, Nate. Always good to see my agent.
Appreciate that.
Yeah.
Always good to see you too.
Yeah.
But you're looking kind of rough. What's happening?
Yeah, I've seen better days. This field has also seen better days. You remember the soybean field? It got a little bit weedy. I wasn't able to get into rotary hoe because of all that rain that we had in June.
Yep. Man, I've been driving by this field a lot, and I was meaning to ask you about it. I mean, going back to June, I almost lost my dog in that storm, so I feel ya. That was a rough time.
It was a lot. And so, to make the best of a bad situation, here's what I'm thinking.
Okay.
Want to run it by you?
Yep.
I'm thinking about just tilling this under, and whether it's fallow or cover crop or a forage, just doing something to control these weeds and make the best of it.
Yeah, and like it would just be black and perfect, really clean. You get some pollinators up there.
Yeah, man.
I feel you on that. So, not to be Debbie Downer, what's going to happen to your crop insurance when you make that beautiful and clean?
Let
Let me just play agent here. Just like bear with me for a second.
Thanks.
So,
Thanks.
if you till it under and you haven't taken it to harvest, you're not going to be able to make a claim. So, if you had a crop insurance adjuster out here, which I think you did, right? Sherry, great gal, really like her.
Super sweet.
Super nice.
Yeah.
She must have told you how much was out here, right?
35-ish.
Yeah, so that's not enough to trigger a claim. If it was 5, we'd have a different story. So to keep good with your insurance policy, what I hear you saying, if I hear you right, you're just going to take this to harvest, aren't you?
Yes. Thank you so much for helping me to remember that is what I was going to say.
I am here for ya. This is why we got to talk all the time, man.
So
I'm really glad I caught you.
Yeah.
All right.
Hey.
Catch you soon.
Thanks, Nate.
Thanks. Now, as you can see from Dale's weedy soybeans, crop insurance covers losses that are only verifiably impacting yield or revenue. Now let's discuss the main players in crop insurance, the team that's responsible for covering you while you're out there. Introducing the USDA, the wizard behind the curtain. I say that because USDA sets the rules for crop insurance, subsidizes the premiums that farmers pay, and oversees the crop insurance companies. You'll also hear RMA, which stands for the Risk Management Agency. This is the agency within the USDA that administers crop insurance programs. The RMA contracts with AIPs, who are approved insurance providers. There are just 14 of these companies in the whole country who are authorized to underwrite crop insurance. The insurance rates and every crop product that the AIP offers is exactly the same. And they are regulated completely by the USDA because they offer USDA insurance that's subsidized by us taxpayers, meaning the farmer doesn't have to pay the full premium. Now we'll note here that there's also private insurance available for specific events like hail or flood. But these companies create their own coverages and set their own rates and are regulated by each state's insurance rules. And on to the next player, the individual crop insurance agent. Agents work as a liaison between the AIPs and the farmers, helping to apply for coverage and keeping farmers informed of the current rules and regulations. They're like the insurance agents that most of us work with for our car or our home insurance, an intermediary between the big underwriting companies and the customer. And finally, the farmer, who works closely with their agent to select and apply for crop insurance coverage and only deals with the AIP when a claim is made. Communication is one way, with the farmer communicating only with their agent and the agent only talking to the AIP. Now you know the players in crop insurance: the farmer, the agent, the AIP, and the USDA RMA. All right. Now let's look at that crop insurance cycle from the farmer's perspective. It's a cycle because the RMA sets those strict deadlines, which each piece has to happen in the right order. And you'd hate for your farmer to miss a deadline now, wouldn't you? The first step of the cycle is the application, which is filled out with the agent. Farmers select crops to insure along with the coverage type and the level of coverage, which we'll cover in a different lesson. For most spring-planted crops, the application deadline is March 15th. So you get it planted and you go to your St. Patty's Day parade. Crop insurance deadlines are hard deadlines, so if an application is not completed by the 15th, the farmer is not eligible for coverage. But if they have purchased insurance in the past, their previous coverage will automatically roll over to the current year, in which case they will not be able to make any changes but can still have coverage. This is why it's a cycle, because it's a continuum. although changes can be made annually. The next step in the cycle is production reporting, where farmers report the bushels they harvested from the previous year. This is because payouts are based on yield history. For most spring planted crops, yield doesn't have to be reported until April 29th for the previous season, but it's definitely best practice just to report production right after harvest. Next is acreage reporting for the current year, which is the farmer submitting what fields were planted to what crop and when. Pro tip line, you got a pro tip for me? Okay. He says the acreage reporting works in conjunction with certifying acres for the FSA, and both need to be done by July 15th. Yeah, that's right. Farmers have to report their acres to both crop insurance and FSA. It's basically the same process, but they have to do it twice. After farmers report their acres, a schedule of insurance will be generated by the AIP, showing the total guaranteed yield and revenue. Because let's remember, yield multiplied by reported acres equals guaranteed revenue. Next comes harvest time, baby. Let's hope that yields are as expected, but if the farmer's combining along and notices that yields are lower than what the guarantee shows on the schedule of insurance, it's time to call their agent and file a claim. All claims should be filed within 3 days of discovering the loss event, or within 15 days after all harvest of that crop is completed. From there, an adjuster from the AIP will be in contact with the farmer to review and calculate that loss amount. Now, wait a minute, you might say. We skipped the part where the farmer pays their insurance premium. You astute little student, you, I tell ya. We are talking about federally subsidized and regulated crop insurance, not your private insurance, so the rules are a little different. Here, premiums are paid after the growing season. For most spring planted crops, premium bills go out on August 15th, and farmers have until September 30th to pay it before interest is charged. Dry day for pro tips, am I right? Pro tip line, you got a pro tip for me? Thank you. He says in some years, an interest deferral program is announced that provides extra flexibility to farmers. This is one of the many reasons that you want to stay current on crop insurance policies as they change. Thanks, pal. If the farmer wants to make any changes to their policy for the upcoming year, they can do that during the application part of the cycle for the upcoming year. Now, when is that deadline again? You can see how the farmer interacts with different players and must submit information at different times of the year. Here's a table that helps me understand what each part of the cycle is, its deadline, and the best practice. Take a minute to study it here, but we've linked to it as well, so you can make some fridge art. Gosh darn it, guys, you're all doing great.
Oh my goodness, you're back. All right, how did it go? How do you like seeing the players of the crop insurance industry and seeing how the crop cycle works? To check if you understand the basics of crop insurance, ask yourself a couple of questions. What is it that crop insurance insures? Who are the players in crop insurance and what do they each play? What are the 5 parts of the crop insurance cycle, from application to claim, and what are the deadlines? I tell you, you are doing just fine. We're about a quarter of the way through the course already. Now I'm glad you're here. Stick around.